Good morning, Britton Brown here, founder of Trade Hive. Hey, I just wanted to start the day here. It is Monday, February 2nd, 2026. I'm going to give you my pre-opening playbook for the NQ. You can find this on my website at tradehivecommunity.com. But with that said, lots of stuff going on. So let's just get right into it. Last night, I'll start with this. Very interesting, 25,400. There was a bid for about 1,400 contracts in the NQ. Very aggressive. At that point, they did finally get through it. The first time it got down, there was a nice bounce. It was really good trading right out of the chute for a couple of hours there. So that was kind of fun for a Monday night or a Sunday night. They finally got through, and sure enough, if you saw my COT report that I did on the YouTube channel over the weekend, pretty much played out exactly the way we were hoping. A nice test, got right down into, off the opening, got into the discount level, had a nice buy there, had a great rally, strong rally, got up above last year's VWAP, could not get all the way back to this year's VWAP. Market then got hit again, had a nice move down, and that's where we saw those lows. So I like it down here. I think we could ultimately see a move down a little bit lower, at least test this morning. I will go over what the market makers are actually playing. So we'll talk a little bit about that. But I'm going to move on over to the daily chart here as we get started. And the biggest thing is the market broke the primary daily bull trend. If you don't have that on your chart, that's a big deal, right? And we're hovering around the green weekly trend line. So the monthly trend line, that is sitting well below us. That's right around 24,600. It's not immediately in play. I don't see that really being the focal area. Could it be in the next day or two? Absolutely. This market is in de-risking mode, so keep that in mind. 9 EMA still remains above the 32, and we are still working off the prior daily red box. You can see that over on the left side of that screen. We really haven't popped any new boxes. The middle of the trend gray box far left was really the indicator that we had a lot of room to run on the upside. These are old boxes, so I watched the fair value on them, and that's about it. So basically, the bias today is going to be a neutral to bearish with downside risk dominant. Probabilities, this is key for you. If you've never heard me talk about this, probabilities, continued consolidation chop is our highest probability. It's just at 40%. There's further downside expansion towards the discount area is at 35, and a strong bullish reclaim above the daily trend is around 25. And that's actually kind of high if you think about it. Again, it's probabilities are ran off a quant program, giving you a daily bias of what's going on. My COT report goes very much into what the institution's flow of money is, where they are, when they want to come back, when they want to de-risk. And so, spoiler alert, high volatility. Don't expect any kind of move to materialize in more of a trending move. It's kind of a see money, take money type of atmosphere. I don't know what systems you guys use. My systems can move from swing to scalp. I'll be mostly in scalp mode is kind of where we're going with this. I'm going to flip over to the 4-hour time frame, give you a look at that. The 4-hour time frame is really the driver of this market. So the price flushing from the prior gray box fair value, that's at 25,183. You can see that down on the bottom side of this. The previous downside move, we popped a gray box. We had explosive move for several days, almost all week, and then we popped a gray box. Now we're headed back down. That fair value is something I'm watching. That's the middle of the box there. That sits right around 25,183.75. We got down there, we reacted. That's interesting to me, right? That kind of goes back to my ultimate bias, which is we're just in a massive range, and you need to be a buyer in discount because that's where funds are going to come in and play as well. I don't want to get stuck in the middle of this. If you, again, if you're watching my videos, you'll know we settled right at fair value on Friday. It left everybody in the, oh my gosh, which way are we going to go? It's kind of a no trade, high volatility zone. Sure enough, they flushed it overnight. And now they're trying to get back onto the bull side. So just be careful. Currently trading below the green trend line, recently claimed the white, and we're well above the red. 9 EMA is still below the 32. It is curling up. It's trying to get back to the 32. That'll be an interesting play for today. The active gray box printed at the top of the range is in premium. The gray box on the left side is in discount. Something to understand. So the bias on the 4 hour is bearish continuation unless structure is reclaimed. Range continuation inside the gray box, 45%. Expansion lower towards deeper discounts, 35%. Bullish reclaim. Trend repair sits at 20%. Let's flip over to the 1 hour. And I'm not going to get into the 5 just because, maybe we'll take a quick peek at it. It's the issue I have with the 5 is by the time you watch it, it's going to be irrelevant. But anyway, on the 1 hour time frame, we're working off a green box with red trim. Anytime we have that, that is high volatility. We go up, we go down, we have big jerky moves from one side to the other. The 9 EMA is below the 32. Again, trying to work its way up. I think I was looking, just a side note, I was looking at the 1 hour on the 4 hour 9 EMA. Curling, it is not curling up. Let me just tell you that the 9 EMA is sitting right where last year's VWAP is, right above 25, 665-ish area. In the NASDAQ, I will expect a response there. So now we've got the 9 EMA starting to curl up on the 32, towards the 32 on the 60-minute as the market tries to get its act together. That's my point. So corrective bounce inside a bearish structure. Probabilities, mean reversion towards fair value, 25,816 area is 50%. Continuation lower after a weak bounce, 30%. Immediate bullish trend reversal sits at 20%. So here's the summary. This is a damaged uptrend. It's not a clean bear trend. I'm expecting two-way trade, failed rallies, and volatility. Trend repair is required before any sustained upside. Keep that in mind. This is going to be a tough session for a Monday. Mondays are always tough, right? We look for late Monday, maybe some positioning by the institutions to come in, and then Tuesday kind of sets the tone for Tuesday, Wednesday, Thursday. So depending on that, we'll take a quick look at the 5 minute just to kind of get your basis if you grab this right away. It is currently 7:48 Central Time. And you can see on this that we popped a red box. Whenever you see a red box, it means that we tried to push one way. It was a fail. We'll call it manipulation lower to get people super bearish. And then we snap back. We get above the fair value. That's the middle of that red box. And that's where you see that projection that says 180 up. That's the main target there. We did not get there, but we did and were able to get above. That blue line is the VWAP, right? And so that's just kind of the daily VWAP that's moving every day. We had a test back down. It held. Again, another red box pops. Market manipulation down. We check out the VWAP. It holds. Now we take off. So at this point, both of these targets are sitting right around the 25, 538, 25 area as the projection. And here comes a new box on this. So let's scan this out just a little bit. That's a gray box. Do we head into a red manipulation, or is this the gray box that shoots us higher? We take out those upside projections. If this turns into a red box and we do not hit those upside projections, first target for me is going to be that green trend line. That trend line is based on imbalances, not a typical trend line, with the second target being down at that 406 level, which is that main VWAP. And then I will kind of reconsider. What I like about that target to the downside is it should be a pretty quick move to the green trend line. That gets you just below the previous red box fair value. And then if they can push it down, I will probably end my trade at the VWAP and let things kind of progress. Again, this is going to be a high volatility day. De-risking. Gold has gotten clobbered again. Watching all the markets. Watch gold, watch silver, watch the bond market. Lastly, what I was going to say is I'm going to flip gears here just for a second. And just here's what I want to point out. You know, everybody talks about market makers. What are they doing? They play 0 DTE. If you don't know about it, you need to go watch my video on it. But here's what I want to know. I'm tracking the S&P market makers, and ultimately 69.31 is a put wall. If we start to crumble underneath, you'll notice if you go to the S&Ps, you'll notice that the S&Ps test that put wall, and then market makers jam it right back up. They're going to protect that. 0 gamma for today is sitting at 69.56. Let me flip this back off. Sorry. And what my suggestion is for you is to ultimately, you know, basically what I do is I take the S&P put wall, call wall, where the 0 gamma is, and I'm going to transfer that over the same areas onto my NQ chart, right? Because again, you think that market makers are trying to stop you out. They don't care about your 1 lots and 5 lots, right? They need size. They are de-risking in certain areas, and they're putting risk on in certain other areas. And that's the way these guys play this game. It has nothing to do with running where your stops are. So with that said, like I said, it's just understanding, hey, where are these guys going to react? We've got call walls, meaning at 69.81 in the S&Ps, where are these guys? These guys are going to respond. They're going to protect that position. So let me put it to you in terms like this. The put wall on the NQ is going to be sitting somewhere in alignment with the ES because they're the big boys, right? 60 or 25, 467.50. And you'll see we respond down and we immediately go back up. The call wall is actually under 0 gamma. And on the NQ, that one is sitting at 25, 564.75. That is an area where the market makers are going to get super busy in this market, right? And just so you know, market makers do lose money, and they can lose a lot in a hard hurry. So keep that in mind. The other call wall is at 69.91 in the S&Ps. We'll deal with that when we get there. So I hope that helps you out. Listen, I wish you a great day, super profitable day. But ultimately, listen, this is all about, I always say, risk first, profits later, right? You've got to control your risk today. So as an example, I will be in scalp mode today. When I will let my runners go, but I will immediately go to break even as soon as I get 10 or 15 points in the direction with a target in mind. I'm not sitting there keeping my stops down where I start my trades at. I'm immediately going to bring that up. And if I'm swing trading, I don't mess with my stops. I let that go until I hit a certain target area. Then I move to break even. But control your risk today, guys. It's Monday. It's a little chaotic. You have de-risking going on. Over on my website, you can see the overnight global macro review. I would highly suggest checking that out on a daily basis. It will keep you on the right side of the market for the most part. There's a lot going on. So appreciate it. You guys have a great day.